Hi everyone, welcome back to Saheb Academy. Now today in this video we're going to see this concept building question of Lumpsum Method. But before watching this video, please make sure you have watched the previous two videos of Redemption of Debentures where we have discussed many things really. Let's just have a glance of that. See here in the first video what we have done. We have understood the basic concept of redemption of debentures first, and then we moved on to see the role of the companies Act 2013 in this chapter in redemption of debentures. We saw that we have to create, the company have to create these two things, DRR and DRI. Yes, debenture redemption reserve and debenture redemption reserve investment, right? So you have to have a proper understanding of that. See, DRR concept we have discussed over here, the journal entries, creation of DRR, and then at last you have to transfer the DRR to general reserve, yeah, and then how much DRR you have to create, when you have to create, and then what the ICI module does. That's very important for us. So what the ICI module does is at the beginning only, after the debentures are issued or allotted, what the ICI module does, it creates the DRR and DRI in the beginning only, yeah, in one go on the first day itself. Yeah, same for DRRI. So that's what we have to do. Yeah, I have told you that. And then we understood the concept of DRRI, debenture redemption reserve investment, how much we have to invest, what is the timing when we have to invest. But what we're going to do, we have to follow the ICI module, create the DRRI also in the beginning only. Is that okay? Right. And then we also saw the journal entries, yes, of DRI, and then where to invest. Yeah, that's also important. Yeah, not from the solving part, but it's important from the theory part. Yes. So these are the securities where we can invest. Yeah, we can create the DRI. Is that clear? Yes. And then we also saw the adequacy of DRR, which companies are required to create the DRR and which companies are not required to create DRR and DRI. Yes, if they are required, then how much they have to create. Yeah, simple. Yes, so this table is very important for you to understand. And then we saw the methods of redemption of debentures, yeah, lump sum, installments, open market, and conversion into shares. Now in this method, I told you purchase in open market, you need to know few of the concepts of investment accounts, yeah, such as X interest, cum interest, accrued interest, and the due date concept. All these things you have to understand, and that's what we discussed over here, cum interest concept and X interest price. Yeah, which is example to understand. And then this calculation is very important. Yeah, this working note for the calculation of X interest, cum interest, and all that. Yeah, ignore the brokerage. Okay, brokerage will not be there. And then we also understood the concept of outstanding interest, which will arise only when the due date is not equal to year end. Fine. So we have discussed many things really in that first video. And then in the second video, what we did was we saw the sequence of events that will be taking place in the company from the issue of debentures till the redemption. Yes, so we understood the sequence properly, the order in which the events happen, and the journal entries also. Now these were the basic journal entries. Yeah, these were not specific to any of the methods such as purchase from open market or convertible into shares. Yeah, okay, so now that's all we did in the previous two videos. Now let's get back to this video and let's solve this question. Now here we have the question. Let's go through it once. Let's try to understand what is happening over here. Now as you can see here, RAFCO Limited, an unlisted company other than AIFI, banking company, NBFC and HFC, issued 10,000 10% debentures of rupees 100 each on 1st April 2020. So from this first sentence we come to know that this RAFCO Limited company, our company is an unlisted company. It is unlisted company other than means which is not AIFI, banking company, which is not FI, which is not NBFC, which is not HFC. Then it falls into which category? Other unlisted category, and it has the requirement of DRR as well as DRRI. Yes, so both the things have to be created in the beginning itself. You all know that that's what ICI module does, right? So you're clear with that. Then they are saying this company, which company? RAFCO Limited issued 10,000 10% debentures of rupees 100 each on 1st April 2020. So how much is that? 10,000 debentures they are issuing. Yeah, this is the number of debentures into the face value. It is issued at face value only, rupees 100. So into 100, that's equal to 10 lakh. So this is the total value of the debentures being issued, the face value. Yeah, so this much money the company has received. Which company? RAFCO Limited. Is that clear? Right. Then they are saying interest is payable on 30th September and 31st March. Now what are these? These are the due dates, yeah, every 6 months when the interest will be paid to the debenture holders of the RAFCO Limited. Is that clear? Yes. Then what do you have? See here, debentures are redeemable on 31st March 2021. So at the end of this year only the debentures will be redeemed. Yes, it's a simple question, concept building question, right? So that's why it's very simple. Okay, so debentures will be redeemed at the end of this current year. Yeah, 31st March 2021. Right now it's 1st April 2020. It will be redeemed in the end of this year. right? Then you have here investments fetch 8% interest per annum receivable annually on 31st March. Now here they are talking about the investment. Which investment? DRRI. Yeah, we are going to invest our money, yes, and on that we are going to receive the interest, and here they are talking about that thing only. 8% interest we are going to receive annually on 31st March. Yeah, while explaining the sequence also I have told you that you have to see where the interest date falls, and at those dates only you will have to make the entries. Is that clear? Right. So here they are saying pass the general entries. So let's do that. Let's pass the general entries. Now let's solve this problem. See here, the first entry that we have to pass is the issue of debenture entry. Yeah? So we have issued how many debentures? 10,000 debentures of face value 100. So 10,000 into 100, that's 10 lakh. Simple. So that much money we have received and liability is being created, right? So the entry for that is very simple. Bank account debit, the company has received 10 lakh money. So you have to debit the bank account and a liability is created. So to 10% debentures, 10 lakh. Simple as that, right? Then what you have to do, as soon as the debentures are issued or allotted, what you have to do, as per the ICI module, you have to create the DRR and DRRI in one go at once. Yeah, so how much DRR do you have to create? DRR is 10% of the value of the outstanding debentures. Yeah, the face value of the outstanding debenture, that's 10 lakh over here. So 10% of 10 lakh. Yeah, so here we have 10 lakh into 0.10, that's equal to 1 lakh. You all know that simple calculation. So you have to create that. Now how do you create the DRR? You take the money from the profits, yeah, this reserve, and transfer that to the special reserve called as DRR. Yeah, so profit and loss will be decreasing and DRR will be created. So you have to debit the profit and loss account. Yeah, it's a reserve. To decrease that, you have to debit that, and to create a reserve, yeah, which has credit balance, you have to credit that to DRR account 1 lakh. Simple. Yeah, how did I get that 1 lakh? 10% of that 10 lakh. Is that clear? Right. Then what you have to do, you have to create the DRRI. Yeah, you have to invest the money. So entry for that is also very simple. See here, DRRI account debit. Yeah, all of these things are happening on the first day itself. Yes, because we create the DRR and DRI as soon as the issue or allotment is over. Fine. So the entry for DRI is very simple. DRRI account debit. Yeah, investment, right? Our asset is increasing. You have to debit that to bank account. You're paying money. Yes. So to bank account will be credited. Is that clear? Now how did I get that 1 lakh 50, 1 lakh 50? It's very simple. The amount of debentures that is maturing in the current year, 15% of that minimum you have to invest. Yeah, so that's what we are doing, and the timing is on or before 30th April. But what do? We don't wait till 30th April. We do it as soon as the debentures are issued or allotted. Yeah, so 1 lakh 50,000, 1 lakh 50,000. Yeah, 10 lakh into 15%. Yeah, let's just do that. See here, it's very simple. 10 lakh into 0.15, that's 15%. So that's equal to 1 lakh 50,000. Simple. Then what you have to do, see here, then you have to pay the debenture interest to your debenture holder. Yeah, you as a company on the debentures, what do you pay? You pay interest, right? So see here, on 30th September you have to pay the interest. So you have to do that. See here, 30th September 2020 you have to pay the interest, and the entry for that is very simple. Debenture interest account debit. The company is paying the interest, right? So it's an expense. Debenture interest account debit. Yeah, and to bank account, money is going out, right? How will you calculate the interest? Simple. The interest is always calculated on the face value of the debentures that is outstanding in the balance sheet currently. So in the balance sheet we have 10 lakh face value of debentures. Yeah, of this, these are 10% debenture. So into 0.10, that's the rate of interest, into 6 by 12. Why 6 by 12? Because interest is paid half yearly on 30th September and 31st March. So into 6 divided by 12, that's equal to 50,000. That's the interest the company has to pay to its debenture holders. Is that clear? Is that clear? Right. Then what will happen? See here, then 31st March comes. Yeah, because there is no other event that is happening till 31st March. So on 31st March now what will happen? We will receive the interest on our DRI. Yeah, we have DRI, isn't it? So on this DRI we are gonna receive the interest. We are going to receive the interest, and in the question it is given 8% interest we are going to receive annually, right? So you will receive the interest on the face value of that investment. Yeah, DRI account, how much is that? 1,50,000. So on that you are going to receive 8%. Yeah, 1,50,000 is the face value of that investment into what? into 0.08, yeah, the rate of interest that is given in the question, that's equal to 12,000. So this much money you are going to receive as your income on the DRI. Yes, so bank account debit, we are getting the money, so debit the bank account and you have to recognize an income to interest on DRI account. Is that clear? 12,000, 12,000, simple. On 1.5 lakh, yeah, on 1,50,000 we have calculated 8%, that's equal to 12,000. Is that clear? Right, then what will happen? Then again, this is 31st March. On 31st March, what happens? Again, we have to pay interest to our debenture holders. Yeah, last payment happened on 30th September. Yeah, for that you have passed the entry. Now again you have to pass the entry on 31st March, the same entry. Yeah, the same entry. You have to recognize an expense because you are paying, the company is paying the interest. Yeah, debenture interest account debit 50,000, same way you have to calculate. Yeah, 10 lakh is there in the balance sheet, outstanding debentures, of that 10% and then 6-month interest, right? From September till March, 6 months, 6 by 12, that's equal to 50,000, 50,000. Debenture interest account debit to bank account. Money is going out and you're recognizing an expense. Yeah, and at last what you have to do, you have to remember, okay, you have to close off these two nominal accounts and also this income account. You have to close them by transferring them to the profit and loss. You all know that. I've explained that in the sequence, right, in the second video. Yes, then what will happen? Then everything is done. Now what you have to do, you have to start the redemption process, the repayment process. Yeah, first from the accounting you have to accept, yeah, in accounting terms you have to accept as a company we have to pay money to the debenture holders. So how do you do that? You have to make the payment due. You have to make the payment due. And how do you do that? See, it's very simple. On 31st March 2021, what you're going to do, you're going to cancel the debentures. Yeah, the liability which you have in the books, 10% debenture liability was created over here in the first entry at the time of issue. Now you have to cancel that liability by debiting the percentage debenture account, 10% debenture account. Yeah, you will debit that 10 lakh, liability is cancelled off, and that liability has to be transferred to the head of debenture holder. Yeah, so you have to create a personal liability to debenture holder by crediting their account. See here, to debenture holder account. So a liability is created in accounting right now in our books that the company has to pay money to debenture holders 10 lakh. Is that clear? Yeah, is that logical to you? Right, so we have cancelled the debenture liability and transferred it to the personal liability of debenture holder. Now we have to pay to debenture holder. Yeah, so see the entries over here. First, what you are going to do, after making the payment due, we are going to bring the money. So how do you bring the money? I have given your parents example. When they have to pay your fees, what they will do? They will bring the money from their savings, and if they have investment, they will sell their investments and realize that investment. Yeah, so put together they will pay your fees. Similarly, what we have to do over here is we have to sell off our investment which we have made previously. Yeah, this DRI, we have to sell that off. Yeah, so now here in the question they aren't saying anything regarding that, yeah, at how much it was sold and all that. So we can't say there is a profit or loss or whatever that is there. Yeah, we assume that it is sold at face value only. So see the entry over here on 31st March 2021. All of these things are happening on the last day. Bank account debit, we got the money. Yeah, we are selling off the investment. The exact reverse entry you have to pass. See here, bank account debit, we receive the money to DRI account. The asset is decreasing because we have sold off the investment. 1,50,000, 1,50,000, the same thing, reverse entry of that. You have sold off the investment, and then what you will do, you have got the money by selling off the investment, but that is not enough to pay the debenture holder. Yeah, so what you have to do, you have to bring more the money and pay off to the debenture holder. Yeah, so what are you going to do? Debenture holder account debit. Yeah, here you accepted that we have to pay to debenture holder. We created a personal liability over here. Right now here we are paying the debenture holder their money. So if you are paying them, then you have to reduce their liability by debiting the debenture holder account. Debenture holder account debit to bank account. Money is decreasing, you have to credit the bank account. Liability is also decreasing because we are making the payment. So debenture holder account also has to be debited. 10 lakh, 10 lakh. Yeah, that's the money we owed to them. We have paid them. Now there is no longer a liability. Yeah, so it's done. So after that, yeah, after making the payment to debenture holder, what is the purpose of DRR? What is the purpose of having this DRR, this special reserve? The redemption is over. The purpose of DRR is over. So what you have to do, I have told you, you have to transfer the money from the DRR to general reserve. Yeah, you have to debit the DRR, reduce the reserve by debiting it. DRR account debit 1 lakh. Yeah, we have 1 lakh in there. Yeah, so that you have to debit and transfer whatever that is there to the general reserve. So credit general reserve. Money in general reserve will increase, so general reserve has to be credited 1 lakh. Is that clear to you? Right. Then what you have to do, at last you have to close off the nominal accounts. Yeah, the income and the expense account. Yes, we have here income account, interest on DRI. This was credited over here. You have to debit that and close it off. Interest on DRI account debit 12,000, the same amounts to profit and loss. Yeah, so that account is closed. Which account? Interest on DRI. Fine. Then what you have to do, you have to close the expense accounts here. Debenture interest, 2 times debenture interest is there. How much? 50,000, 50,000. So that's 1 lakh. So 1 lakh amount you have to consider, and you have to close off the debenture interest account. See here, profit and loss account debit to debenture interest. Debenture interest is being credited over here to cancel it off. Here it was debited to recognize the expense. Right now here at last you have to credit that to cancel it off and transfer that balance to the profit and loss account. 1 lakh, 1 lakh. Yeah, simple. That's how you have to do this. Yeah, was it tough? No, it's very simple. Issue the debentures, create a DRR, create a DRI, and then paid the interest on the due date on 30th September, and then at the end, on 31st March, we first received the interest on DRI, and then we paid the interest on 31st March. The due date was like that on 31st March, so we had to pay the interest at this date. Yeah, so we did that. Yeah, 2 times we paid the interest every 6 months, on 30th September and on 31st March, and then we made the payment due to the debenture holder. We have to pay. Yeah, and then we sold off the investment to bring the money, and then we paid the debenture holder their money back. And then what is the purpose of DRR? There is no purpose of DRR after the redemption, so we transfer the money from DRR to general reserve, and then we closed off the nominal account, the income account and the expense account. Yeah, but here while taking the payment debenture interest, you have to see properly and take the two amounts properly. Yeah, 50,000, 50,000, because there are 2 entries of that. Yeah, simple. So this was the the concept building question of the lump sum method, and I feel it's so simple, right? It's so simple. You understood this, right? Easy. Yeah, so this was the basic question, right? Now let's see an alternate version of this question. Yeah, let's go to that alternate version. Now here we have the alternate version of the problem 1. Yeah, the same problem you have to see with just little bit changes. Yeah, these changes. See here, assume in problem 1 debentures were issued on 1st April 2015, 5 years back, and they have been paying the interest and all that in these 5 years, and let's say today is 1st April 2020. Yeah, and in the balance sheet of the company they have DRR of 70,000 already and investment DRRI of 90,000 already. Okay, so rest all things will be same. Yeah, unlisted company, everything is same. Interest is payable on these dates only. Debentures are redeemable on 31st March 2021. Yeah, at the end of this year only the debentures are redeemable. So what we have to do, how are we going to solve this question if we have got these changes in this problem? Tell me. See, DRR is already there, DRRI is already there, but what we have to do, are we not gonna see the adequacy of DRRI? We have to see the adequacy of DRRI. We have to see whether it is enough or not. Is it enough or not? See, as DRR and DRI already exist, so we have to check the adequacy. Is it enough? Is this enough? We have to see the compliance. Yeah, is it complying with the law or not? Yeah. So if not adequate, if it is not enough, then we have to provide for the shortfall. Is that clear? So let's see, it's very simple. Yeah, see, I've already done this. DRR and DRI, the same question, right? So how much was the requirement over here in this question? The requirement was DRR 1 lakh and DRRI 1,50,000, isn't it? We just now saw that, isn't it? See, DRR 1 lakh and 1,50,000 was DRRI, isn't it? Same question, nothing has been changed, the same question. It's just that in the balance sheet already 70,000 and 90,000 is there. Yeah, so what you have to do, simple logic, simple common sense, the remaining portion you have to create. That's the simple conclusion. Yeah, so 1 lakh and 1,50,000 is the compliance. This is the requirement according to the law. And what do we have right now in the balance sheet? The question is saying we have 70,000 of DRR and 90,000 of the DRI investment. So what we're going to do, simple, transfer 30,000 more from the profit and loss, yeah, so that we can comply with the law and make it 1 lakh DRR, and invest 60,000 more, yeah, so that it can become 1,50,000 and we can comply with the law. Yeah, so that's what you have to do. All the journal entries will be same. All the journal entries which we just saw previously, everything will be same except that these two entries will be different. Yeah, because already DRR is there of 70,000. Here you are going to just make the entry of 30,000. Is that clear? Yes. And then DRI also is already there in the balance sheet of 90,000, but we need 1,50,000, so we are going to make investment more of 60,000. Yeah, that's all different. Yeah, that's all, it's different. Rest everything is same, everything is same. Yeah, see here I have written the journal entries over here. 1st April, only this much difference will be there. Profit and loss account debit 30,000 to DRI account 30,000, and then DRI account debit to bank account. Yeah, we are making DRR of 30,000 more and DRI investment also 60,000 more. That's all the other journal entries will remain same as problem 1. Okay, so whenever you get a question where they already give you existing DRR and DRI, then you have to check the adequacy. Is it enough? Is it enough? Yeah, if not enough, then we have to provide for the shortfall, for the deficiency. Is that okay? So this was a simple concept I had to explain you. Yeah, easy, you understood this, right? It's not a big deal, it's very simple. Just provide for the balance, that's all. Yeah, so this is it. Okay, see you in the next video. Yeah, bye. You understood this, right? Yeah, bye.